CoreWeave just shocked the market. After being crushed more than 50% from its highs, the stock suddenly exploded upward, and the CEO directly fired back at critics. So the real question is this: is CRWV setting up for a major comeback in 2026? Or is this just another trap? Stay till the end because I'll break down the bull case, the risks, and why competitors like Nebius matter more than you think. And just a quick reminder, I'm not a financial advisor, so this video is for entertainment and informational purposes only. Always do your own research before making any investment decisions. Let's start with what happened. CoreWeave stock surged after CEO Michael Intrator publicly rejected claims that the company's business model relies on circular financing and risky accounting. These were serious accusations that had been weighing on the stock for weeks. His direct and forceful response, defending the company's integrity and business practices, was exactly what the market needed to hear. This response alone triggered a strong rally, which shows you just how emotional and sentiment-driven these AI stocks still are. It wasn't about a new earnings report or a major contract announcement. It was about restoring confidence. It proves that in a hot sector like AI, narrative and leadership communication can move a stock just as much as fundamentals can. But before this big move, CRWV had been absolutely hammered. The stock dropped over 50% from its peak, and investors were getting seriously worried. The fears centered around three key things. First, high debt. Building out massive data centers filled with expensive GPUs costs a fortune, and CoreWeave has taken on significant debt to fund its expansion. Bears were pointing to this leverage as a major red flag. Second, a heavy dependence on NVIDIA. While having a close relationship with the king of AI chips is a huge advantage, it's also a risk. Any disruption in that supply chain or change in partnership terms could spell trouble. And third, the biggest question of all, whether the incredible demand for AI could slow down faster than expected. Bears were calling CoreWeave over-leveraged and possibly overhyped, arguing that the gold rush for GPUs couldn't last forever. But the CEO pushed back hard against this narrative. He didn't just deny the accounting claims. He went on the offensive to build the bullish case for the company. He pointed to CoreWeave's massive backlog of orders, highlighting the long-term contracts they've already signed with major customers. This isn't just speculative demand, it's locked-in revenue. He emphasized the strong, ongoing demand for specialized AI GPU infrastructure, which is their bread and butter. In simple terms, he argued that customers are still lining up to get access to their high-performance computing power. And CoreWeave believes it's positioned right at the center of the AI compute shortage. His message was clear: this isn't a bubble. It's the foundation of a new technological era, and CoreWeave is providing the essential tools. This is so important because when we look ahead to 2026, AI infrastructure isn't slowing down, it's just getting more complex and more essential. It's evolving beyond just training the initial large language models. Now we have a growing need for inference, which is the process of actually running AI applications. We have enterprises trying to build their own custom AI solutions. And we have new, specialized workloads that all require massive amounts of high-performance GPUs. If this demand holds up, and all signs suggest it will, companies like CoreWeave that provide this infrastructure could see absolutely explosive revenue growth over the next few years. Yes, the profits might lag in the short term because they are reinvesting so heavily, but the top-line growth could be staggering. Now here's where it gets really interesting for investors. It's not just about CoreWeave. You have to look at the competition. A recent Motley Fool article highlighted Nebius Group, a key CoreWeave rival, as a stock that could potentially double in 2026. Nebius does the exact same thing. It builds and rents out massive GPU clusters for AI workloads. And just like CoreWeave, it's growing at an extremely fast pace. The fact that analysts are pointing to other companies in the same niche validates the entire business model. It suggests that the market for specialized AI cloud computing is big enough for multiple major players to succeed. Watching how rivals like Nebius perform can give you clues about the health of the entire sector. But here's the big risk, and this is something you must understand. This applies to both CoreWeave and Nebius. Neither of these companies is meaningfully profitable yet. Their sky-high valuations are built almost entirely on one single assumption: that the massive, urgent demand for AI compute will continue at full speed for the foreseeable future. Their stock prices are priced for perfection and years of future growth. If enterprise AI spending slows down, if a new technology disrupts the need for so many GPUs, or if a recession hits and companies pull back on their tech budgets, these stocks won't just fall gently. They will drop, and they will drop fast. The high growth, high debt model is a double-edged sword. So here's my honest investor takeaway from all this. CRWV's recent rebound shows that the market still deeply believes in the long-term story of AI infrastructure. This stock could absolutely move much, much higher by 2026, especially if they continue to execute and prove the bears wrong. But the extreme volatility is the price of admission. This is not a stock for the faint of heart. If you are fundamentally bullish on the future of AI compute and believe we are in the early innings of a multi-year supercycle, then CoreWeave is a stock that you have to watch very closely. Now I want to hear from you. Drop a comment below. Are you bullish or bearish on CRWV? And if you want more AI stock breakdowns just like this one, make sure you subscribe, because this sector is just getting started. Thanks for watching.